Hello, everyone. Welcome to my podcast. Let's talk. It is said if the foundation is solid, then the building will be well made. So, here I am today with this podcast on share market to make you base strong so that you make money and build your own buildings. Hi, friends. I'm Chris, and today on this Let's Talk episode, we'll clear all your stock market basics. Beginners generally get scared by just hearing the name share market or the share market. We have even seen in movies that the share market destroys everything. It is showcased like a villain. Even our family members generally tell you to stay away from the share market. It is normal to have confusion and nervousness. But today, after this podcast, some of your confusions will be clear and you'll find out how and where to enter the market. First, let me tell you a fun fact. 30 years ago, if some of you, your family members, had invested rupees 10,000 in Wipro shares, so today, 30 years later, it would be around 600 crores. I know what you must be thinking. So this is the potential of stock market. Definitely there are risks also in the market. As there is profit, there is loss also. There are many such stocks where if you had invested 600 crores, it would be 10,000 by now. So this market can bring you big profits and even big losses too. So first, I'm going to tell you the questions that I'm going to answer in this podcast to make it easier for you. First, we are going to discuss is the share market risky? If yes, then how much? Then we'll discuss how much return can you make and how much expectations can you make of this market. We will know how much money you need to start in this market, or even as a student or a beginner, you can start with your own pocket money too. Both, what will be the process of entering? Is it easy or difficult? What is a demat trading account? Or basically how to start? How does market work? How does the share prices go up and down? On which basis can you select a share? You'll know in-depth knowledge of this. Which are those books you should study? Which are the websites that you should visit? What you need to know. So the first question, is the share market risky? This guy asks you to go through a basic example. Basically, when you buy a share, you're buying a somewhat small part of that company. That is why it is called share. And you are becoming a co-owner of it. So now, you tell me if you invest in a friend's business or a relative's, it is that the business does not do well and your money gets down. That is risk. Just like that, it is there in the share market. Big companies like Tata, Reliance, Godrej. And if these companies drown, then your money will also drown. If the companies show growth, then your money will also grow. So there are many companies that even go down and make losses. If you look at Eicher Motor, in the past 7 to 8 years, they have increased the sale of the bullet bike many times. And likewise, their shares have also grown at the tune of 10 to 20 times. There are many shares like this. I've given the example of Wipro, TVS, which has grown 10 times in 10 years. MRF is one such example. There are many more shares or the companies which have even made losses. So definitely it is risky and that is why the returns are high. And we will also discuss the risk mitigation methods and how you can lower your risks. Now comes the second question, that is how much return will I get? Let's take an example. If you invest in a business with your friend, start with rupees 10 and you get 10, 30 to 20% or 30% profit. And it can differ in a fixed criteria because your friend can even make losses. But it's just about one share. When you enter the market, you just don't enter in one company. Generally buy a basket of shares of around 8 to 10 companies. Even if one or two companies come out bad or drown, still you don't lose your entire money and you make up for those losses in the companies where you made profit. If you invested correctly, 18 to 20% return in India's high growth economy in the long run is expected, which is at around 5 years time frame. To find this out, you must listen to this podcast. Now comes a very interesting question. How much money is enough to start? See, despite the amount of money you are investing in the stock market, it is more important in which type of shares you are investing and how consistently they give you returns. I take up with an example. Say if you're investing 1000 rupees per month, which you can easily afford starting with your own even pocket money, and you increase this by 15% every month. So if you're investing first month 1000 and 1150 next month, you're getting only 15% return on your investment. So with 1000 after 25 years, you will end up with 1 crore in hand. So how did I calculate this? Simple, through the SIP calculator. Next question. How difficult or easy it is to start? If I want to enter the market, then what is the process? The process is very simple. You only need three documents. The Aadhaar card, PAN card, and the bank accounts are all that is needed. If you don't have, open one. After that, all processes are online. There are many online discount brokers like charge zero brokerage and can open your account. So you don't need to do anything there. Our online discount brokers like Zerodha, where I have my account, you can open the account without any physical paperwork. You just have to go online, download the app and open the account. It's almost free. There are some government taxes charge which is a tune of less than 0.1%. So it is very simple to use and very convenient for beginners. Now the next question. If everything is so good, then why share market name is so bad? Why people fear it? Can I tell you a simple reason? This is the mindset of problem. When we buy a property, does anyone think of selling it in 4 days or even 1 month? Or you're buying gold, it is generally transferred from one generation to another and you never sell. So you generally keep it and let it grow. That is what you have to do in the share market. Like we give gold the time to increase. And if your friend says that he invested in share market and he made 40,000 profit in 1 day, double their money in 2 months, which means their expectations are wrong. They come here thinking to become rich overnight. That is wrong. You can either become rich overnight by a lottery or by gambling elsewhere. Never think that the share market will make you rich overnight. That is not going to happen. Like I said, return between 18 to 20% should be expected, which means if you get 18 to 20% return, your money will be doubled every 4 years, which is you compare it with the bank fixed deposits, which takes 10 to 12 years to double your money. Accordingly, today's interest rates. So compared to that, share markets is giving you three times more returns. So don't be greedier than this. So select those companies which you can judge and you will do pretty well. So friends, welcome to the share market. Now I'm going to discuss the two most important interesting part. Why do share prices go up and down every day? How can you predict the prices increase? When is going to decrease and why companies are listed in the share market? And second, I'm going to tell you about my favorite books, website where you can go and learn more about the share market. But before discussing these two topics, so that your knowledge does not end here and you get next part of my podcast and you keep listening to it to value your knowledge. So find out what is this share market concept and the prices, why, how do they go up and down. Now let's see. If you want to start a business, you need a little money. Family members can give you, your relatives, friends can give you. If you need more money, you can go and take up a loan from the bank. But you need money at the tune of 20,000 crores, no bank won't give you, nor your friends or relatives, unless you are from the Ambani family, which many of us aren't. So in this case, you will give this. Who will give you this money? The public will give you this money. This means you will tell the public about your business model, that this is my plan. I'm going to make this factory where I'm going to make this car. It will run on electricity, water, hydrogen, but I need money. Now, those who trust you will give you money in return. You will give them partnership in a company because they have put money in your faith. Partnership in the company will be in form of shares. He took the money and gave shares to those people. Now, this is when companies took money from you and gave you shares. This can happen that you received a share today and after 2 days you need money and you want to sell those shares. The company will not buy the shares back because they've already invested their money and started building their factories. So, who will give you this money? So, there should be a market where you can give that share to someone else, and we call that market the share market, where you can take shares of more than 4,000 companies anytime and give them back anytime. If you think that Colgate is going to do well, the toothpaste is selling more, you can go and buy that share. Then anytime you can take the shares from someone else through the share market. And if someone thinks Colgate is going to do bad and Patanjali is going to do well, so they're going to sell those Colgate and buy Patanjali as per their choice. Because millions of people every day are buying and selling shares in the share market. That is why you will always find a buyer or a seller for your shares most of the time. And that is the importance of share market. Just think, if you want, you can be a part of Ratan Tata's business by buying a share with one click. If you want, you can buy Adi Godrej Empire shares. If you want, you can be part of Geo by buying their shares. You can just buy one share by investing 1500 and tell your friends that I am part of Geo. That is mine. This is everything is clear. If you have any doubts, you can please post it in the comment box. I will be very happy to answer your questions. Now let's discuss the last part. What are the books and the sources where you can learn investing from home? Apart from that, there are many books. My favorite book being The Rich Dad, Poor Dad, good book for starters. After that, you grow up, you can learn more, you can go, and read more books like advanced books, which is the title of the book, The Education of a Value Investor by Guy Spire. Now I know that you are feeling a little confident. It is, but it is very scary, initially buying the first share. Even I was scared when I was buying my first share. So for your good initial experience and safe company investing, tell me which was the first share that you bought and what is the first share that you're going to buy, so that we can share your opinion with those and everybody who's listening to this podcast. And your friends and relatives want to invest in the share market and they want to learn about investing, you can share this podcast with them. Now, this is your host, Chris, saying bye bye and meet you in my next podcast. Till then, keep listening to my podcast, Let's Talk from Chris. Thank you very much. Take care.